All right, guys, how's it going? So we're going to be doing a review of the week here and just sharing a little bit about my thoughts for the week and the upcoming week, and just doing a little bit of a look back here. So we'll be doing that and then discussing my trade from Friday. And so let's just go ahead and get into it. So to start, JBDI was the trade I took on Friday. It was the one that was moving up at the time. It was kind of grinding higher, was not really just moving that fast, but it was just making these little spurts up and up. And I wasn't really thrilled about this particular stock because every time it would just get this little move, it'd do a bigger pullback and then do another move and do a pullback. And by the time I decided to jump into this thing was almost a little bit too late. And that was right here at $1.35. I actually jumped in, and then this thing had started to push up higher. So when I made this move, I was thinking, yep, this is going to be the leg higher. And it was a micro pullback, and that's what I kind of felt like this was doing at that point. And then, as you can see, it formed a shooting star candle, which we all know is not a really good sign. That means, as shooting stars are, they go to the ground, so that's not a good thing. So, that's definitely an exit indicator. So I got out on that trade, and when I got out of the trade, I thought maybe I'd stop out with at least $10 of profit, and that just kind of evaporated because it took a little bit to get out of the trade. It was kind of grinding, and it was very thickly traded, and ended up just breaking even. I didn't lose any money, didn't gain any money, so it was like, well, I guess I did my trade for the day, but wasn't really thrilled with it, but moved on. And, didn't lose any money, so we're good. We didn't take any big losses there, so which was good. So overall, that was a trade for Friday. So it wasn't really like I wanted to talk a lot about that because it wasn't a big deal. And so anyways, I feel like it was an okay trade, but we could definitely do better. And I've been spending a lot of time over the last week just trying to figure out risk reward and really trying to figure out the risk that I take on a trade. And when you are trading, risk is really important to assess. And like when I was looking at this trade, I thought, this might punch through, and I was hoping to get in back down here on this particular trade about $1.29 actually, because this is where it broke the falling candle, made that candle over candle approach right there. And that would have been my entry right there. But we filled too high and got in at $1.35. And, well, you can tell that was not a good place to get in. So kind of a little bit of a problem there. You got to get in a little bit sooner on these. But, hopefully next time we do this, it'll come out a little bit better. The problem with this is, though, when you look at this trade, this really isn't a great trade. Simply because at best, this would have been, if I got in at $1.29, this has been a profit to loss ratio of a 1-to-1. And what I mean to that is you had the risk of winning of earning $1 or a risk of losing $1. And so if we kind of look at, I got a little calculator I put together, and I can kind of talk about that here real quick. So for example, let's say if I buy in on, let's say, a random price, let's say $2.55. Well, if I get in at $2.55, I want to see a 20% possibility of making a 20% per share gain on any given trade. Well, that would mean, given that my account value is at $138, that I could take up to 400 shares at this. So my position would be at 255, and I would be looking to go up to 275. And then losing at the very least, at the most, I should say, $2.45. So what that means is that's 10 cents less. So 10 cents less and 20-cent gain. So you know what I'm saying? Because that would keep a 2-to-1 profit to loss ratio. A simple way to say it is you could gain the possibility to gain $2 and lose at most $1. So in this case, when I was in this particular trade, let's go back to that real quick. So I got in at $1.35. I would need, so we'll go back to my calculator, at $1.35, I could have taken, say, 700 shares, and my profit would have gone up. I would have liked to have seen it go from $1.35 to $1.55 and not go any less than $1.25. Now, thankfully, I stopped out at I think it was $1.33 and didn't lose anything, which, that's always kind of funky when you do that. because when you look at the actual share, I got in at $1.35 and lost to $1.33. Technically, I should have lost 2 cents a share, but it didn't do that in this. And I don't know the specifics behind that, why it would do that or anything. It's calculating that in the background. And for whatever reason, it did not do that. So, and that's fine. It just showed it what it was. So I didn't record the trade. I said, you know what? It's just a flat trade and that's it. And we'll go from there. So that was what I'm trying to do there. When I assess a trade, I'm always thinking of the risk. So for example, one of the stocks that was really moving the other day was a stock called WHLR. And while that stock was really going up, it was squeezing up, and I was watching it do that, I didn't take a trade on it because I knew the first thing I'm asking myself was, can I manage risk on that? And when I looked at the spread on the level 2, which shows the depth of the market, the spread was about 10 to 15 cents. And that price of that stock was right around $20. And honestly, I didn't want to take that trade for 2 reasons. One, I could only buy at $20. I mean, if we look at my calculator here, well, at $15, I could only buy 67 shares. So at $20, I was only going to be able to get about 50 shares possibly. So it wasn't going to really be beneficial for me in any way to buy on that stock. The second problem, though, which was probably the bigger problem, was that the fact that this had a spread of 10 to 15 cents. So if I'm only averaging at most, if we look at my average share position, I'm at 4 cents. My earnings per share on average is around 4 cents. So when we factor that in to my metrics, if I jump in a stock where we're going at 10 to 15 cent spreads and I have to bail out on the bid, well, I'm not going to only just not make 10 cents, I'm going to lose, an additional 10 to 15 cents on top of that. And I'm going to lose a lot of money real quick. That's to me is very risky to jump in on a stock with, number one, low share size like that, not to see a big gainer. And number two, just to buy in on a spread that could probably, lose me an additional 10 to 15 cents per share. So I know that sounds confusing if you're not used to it, you don't know nothing about that stuff. If you really spend the time to learn this stuff, that's why I built this calculator to do this, because that way when I'm kind of sitting there and I'm evaluating a stock and I'm saying, well, this stock priced at, let's say, $11, so I can only buy 94 shares. 90 shares is what I could buy. To me, that's not enough. I want to buy minimum, absolute minimum 100 shares, but I like 200 shares because at $5 a share, so if I would be at, say, $5 a share, I could buy at least 200 shares of this stock. And the spreads are usually going to be like typically 3 or 4 cents at most. So, that minimizes my risk a lot more than, say, jumping in a stock that's $18 to $20 and losing 10 to 15 cents a share if I have to bail on the bid. Now, most of the time, if I'm doing this, I try to get out on the ask. But if it's really tight where the stock is just thickly traded, I know I'm going to have to bail on that bid, because it's the only way you're going to absolutely get out of that stock really quick. Because otherwise, you might get in and the stock might climb, but you try to get on the ask and you're just going to sit there and it's not going to fill. And, so someone basically has to come along and buy your shares. And if they don't, well, you're not going to get out, and you're probably going to lose the money anyways, plus bail out on a bid on top of that. And then you lost all that and more. So not a good thing. So I like this calculator for doing those types of things. So the way I think about it, so I'll just kind of go through it again. $5 is kind of where I want to be at, $5 and less. I want to be able to buy 200 shares because, again, we can get a position at $5, we can go up 20 cents, or we can lose up to 10 cents. So that would give me my 2-to-1 risk reward ratio. And when we look at the position as far as profit would go, so we'd be in at a position of $1,038 roughly. Well, we'll probably be in a little less than that because we like to round it to straight like 200 shares. I'm not going to buy 208 shorts exactly because that typically don't work that way, but I'll just say, okay, we'll round it down to 200. And then we could expect a profit right around, say, $40 and a loss of $20. So that's at a $5, buying in at $5 with 200 shares. So I know my risk reward right there is this right here. So what is the max I could lose on this? $20. If I'm buying it at $5, my max loss is 20. So How do we do that when we bring that into this here? So when we look at a trade, we obviously want to buy in as close to support. Well, what was support on this trade that I took? It was right here. Trade support was right here. So that means I wanted to get in order for make this trade a 2-to-1 risk reward. I had to get in almost down here at $1.27 at best, but I couldn't do that because I needed to see confirmation, and that was this candle going above this candle. Once it gets to this point right here, this is the buy, and looking at this particular position, now it was a 1-to-1 trade, so it wouldn't have been a very good trade. So overall, that's how I calculate that. And one thing I've been working on, I know it's a lot of numbers and you just really got to spend the time to think about it. So the way I kind of do is I'll test myself a little bit. So if I get in $1.38, what's 20 cents above that? That'd be $1.58. That's my profit target. So one thing that's kind of nice about Webull, it'll show my position when it comes in. It'll just show it right here up on the screen where I'm in at. So it'll say if I'm in at $1.34, I want to get to $1.54, and just real quick, I can calculate now the max I want to lose in most cases. If I can get to this low, I'll look at the pullback, and a lot of times I'll watch this pullback. So I'll say, well, the most I want to lose is $1.26, so I want to be in as close to that line of support as I can be, but I need to have confirmation as well. So that is in question what I was dealing with right there. So this week, and just overall, when I look at most of my trades for the week, so let's go back and we'll look at that real quick. The only trade that really there was two trades probably. This one right here, got in $1. I got in at 38 cents, got 39 cents. Now technically, this is a penny stock. It's just not going to do 20 cents. Most penny stocks do not go up by 20 cents. They go up by a few pennies, 5 cents, maybe 10 cents at the max. So I knew this stock was not going to have that ability to do that. And this is typically why I don't want to jump into penny stocks. Now this stock right here, HKD, did have that potential, and I got in at $4.69. So I should have been seeing something like $4.89 as my profit target. So and then a max loss possibly of a $4.59. And now I got in there and I got really close to that 20 cent number. I bailed too soon on it. Actually, I should have been watching my level 2 a little bit closer and calculating that number in my head for that 20 cent take profit mark. And that's what I was really looking for, was that 20 cents and making that gain on it. So instead I got 13 cents. So that really makes a big difference in your trading, is just understanding these numbers and being able to say, hey, I want 20 cents. So what is 20 cents on 469 is 489. If it was 472, it would be, just making a number up out of my head. Then we'd be saying 492. That's my profit target. So I always want to take those numbers and I want to think about those while I'm doing it. And it's hard to do that because it's the heat of the moment and you're trying to get a trade and you're trying to hold on to that thing as long as you can. But you have to look at it as, look, I got in at this price. I should be going to this price. That's what my profit target is. So again, it's not as easy as it looks like. It's kind of like trying to ride a bicycle. Until you get the hang of that balance, it's going to take time to do that. So, all right, let's move on to the last part of this and see what's moving for the week. And to do that, excuse me, let's just look at the scanner and see what the aftermarket hours. This would be the scanner, what aftermarket would have been on Friday. And let's see what overall. So we got a few different stocks here that we could possibly look at. So the first one was EFSH. Is at $1.35. So it meets our money, what our stock prices should be, when anything between $1 and $5. That's typically what I'm looking for. And then it's over 10%. The volume, it was fairly low on this, but the float was extremely low, which is a really good sign. It's something I'm looking for. So let's go ahead. We'll look at that stock, what was it again? EFSH. So we'll go ahead and we'll take a look at that one real quick. EFSH. And just looking at that move, we'll bump in right here. Where are we? Okay. So it made this move after market on Friday, bumped up all the way to $2 and bumped back down. I don't know if this is really going to make a move. I don't think so. it just really didn't hold up above VWAP. If the stock would have held up above VWAP and traded, but I think, it's Friday, so it's hard to tell if, it was just a volume thing, which I pretty much think it was. But it did hold up to here, so we'll keep it on the radar just to see, if it does make a move on Monday morning, but it's not, I don't know. I looked at the news on this. I think, let's go ahead and look at the news on that particular stock. Sale of High Mountain Door and Trim, a division of the 1847 cabinets and more than double the original purchase price. So I don't know if that's really that great of a piece of news for a company. I don't know if that's really going to really move the needle per se. So I'm not really thinking that will be the big mover there. So let's go back. Let's see this stock right here, PETZ, $1.65, 4 million in volume and 10 million. Yeah, I'm trying to keep that float 10 million and less right now. So PETZ, let's go ahead and look at that. By the way, ALTM, not going to look at that one. A billion shares in the float. There's just no way that thing's going to make a big move. So PETZ, let's go ahead and take a look at that one. PETZ. I mean, it's up just on no volume though. There's just no volume behind it. And what was the news on that one? The news on that one, and that was back on September 5th. Let's see if with the SEC, any filing, 6K on 9/26. There was a 6K filed. I don't see anything big there. If that was an offering, a shelf registration, that's usually an S3, I think. So, some proposals. I'm not sure. So I'm not seeing anything huge there. It may move up, but, I'll keep an eye on this one as well. But, oh, wait a minute. This isn't PETZ. This is PET. PETZ. All right. Oh, this is the straw. Okay, yes. Now I'm seeing that because, man, this one's really, someone was not moving. I was like, that don't even look right. So sorry about that. But you look at these things, you type it in, you thought you typed the right thing and it wasn't. So anyways, this thing did move up. It fell below VWAP, fell below the 200, but it is somewhat holding up over, I would say about 50%, right? Close to 50% of the move. It may make a move at 4 a.m. Whether it will hold that at 7 a.m. when more of the trading comes in, at that point, we'll see, but I'll keep it on the back burner. So not sure on that one as well. All right, let's go back and look at see what we got left here. SRFM 235. This could be a possible SRFM. Let's go ahead and take a look at that one real quick. SRFM. Oh, so this one had a move, but no volume. And we do have the right stock this time. So it's a nice stock. Overall, float, 12 million shares. Average volume is 150K. Volume was, it's just light volume. It wasn't high up on the list, so it's probably going to be a little bit harder for it, to get noticed, but maybe it will. I mean, it made a high of 257, which is definitely in our target range. But what was the news on it? So let's look at the news on that. That kind of dictates what's really going to happen here. Let's see, October 4th, Technologies, Planeteer Technologies expands stake in Surf Air. Okay, so that's good. It did something there. Prominent data analytics firm made a significant additions to its investment portfolio by acquiring 1.27 million shares of Surf Air Mobility. This transaction increased their Planeteer total holding to the company of 2.73 million shares, making it substantially, substantially, so finished at $1.68 per share. So, and that's kind of where it's holding. Yeah, it's a little bit more than $1.68 a share. So that's kind of neat. That was late in the day that it made that news, evidently. So That's why. Well, it did come up in this area, so it was at the pre-market. It got that data, I think. So, but it just took all day to grind up there, and then afterwards, the end of the day, it just popped up more. So we'll definitely keep an eye on that particular one, right there. So, all right, what else we got left here? TC, 2 million. TC, let's go ahead and take a look at that one real quick. So we do got some possibilities here. I think there's actually a good list this week. This one as well held up. Light volume, but maybe it might, understandably. I've never dealt with this particular stock before. Let's see what the news on this particular stock was. We'll go back here on my phone. And by the way, if you want to know how I get all this stuff, there's an app. I'll look it up here in just a second and share it with you. But there's an app I use. So TC didn't have anything big there. Let's look at the financials. SEC, a K6 was filed the end of August. A 6K was filed at the end of August, and that was a while ago. So that was a month ago. So not sure what that was. So again, it's made its move up. Not really sure if it's going to turn out to be anything big, but we maybe. See CLLS, not going to look at that. That's 100 million shares in the float. Too high. IBO, 11 million. So this could be a possibility. I don't know if I've dealt with this one before. It seems like I have. IBO. All right. IBO, wow. The stock made some huge moves during the day on Friday. This stock really shot up, especially at the open on Friday. It held throughout most of the day, and then let's see here. Held up above VWAP, which is a good sign. And then it let's see, at extend after hours, it just held that level, so didn't really drop, and that's a good sign. Problem with it is it's $226, which I'm just wait a minute, that's IBM. Holy cow, what the heck, guys? IBO. I thought I typed IBO in. No wonder it. Now this doesn't look so good. So IBO, not so good, guys. I should mention I am a beginner, so I'm not perfect at this. So I've been studying this stuff since March of 2024. I've always wanted to do this. So $226, that is not a share we wanted to deal with. That's a large cap stock. So we want to stay with small cap stocks between $1 and $5. That is what I want to be dealing with here. So that stock, you know what? It looks like it's sold off. It got in. It's not a good stock. Let's look at the daily on that one. Yeah, that looks like an IPO. Initial public offering. It did at $3. Let's see, a while back on 9/16. So that was back in September. This stock came into play here. And it's just indicative of IPOs, they just sell off like this until they get good news, and, they really get the value of the company adjusted. And, and these companies, if they don't report good news, they're not going to get good numbers, so that has to happen. So it's like anything. These stocks are not going to get bought up unless people are hearing good things about them. So that's what needs to happen. So, all right. Let's see if there's anything else left. We're kind of getting down this list pretty far. TVGN, I've dealt with that one before. It's just too low priced. CHNR, too low price. PLAG, this could be a potential. Very low volume, though. Let's see here. PLAG, let's just take one gander at that particular one. See if we can get it typed in here right this time. Looks like we did get it typed in right. Awesome. So, looks like this particular stock. Let's go back here. Not the best. I wouldn't Planet Green. I don't even know what the news on it would be, but let's look here real quick. PLAG. I mean, I don't know what the news on it is. Doesn't look like there's really any news. The last news was an SEC filing on 10-QA, which I'm not sure what that is, but You know, part of the fundamental analysis, just going through these SEC filings, which can be honestly really boring. I don't find it that bad. I did a lot of this when I used to have an actual license and doing this stuff. I never traded stocks. I was never a market maker or anything like that, but I had a Series 6 back in the day, selling insurance, you know, like variable insurance, variable annuities, things like that, mutual funds. You know, I've always wanted to do this. That's why I'm doing this. A lot of fun. But overall, you know, you look at this stock, not too interesting anyways. So I don't think we're going to look at that one. So we'll just kind of keep that one off the radar as well. We'll delete that. I think I'll keep the rest of these just to see. We'll see if I can delete that one. I didn't want that one. This one right here, we'll keep a look on these 5. So there you have it. There is the 5. I'm going to look at that. I don't think there's anything else I really want to look at on the list here. I mean, maybe XRTX. This one's pretty low as well. But they're so low on there. I don't know if it's really going to value. I mean, they're right at 10%. You know, obviously if they were up here, and to be honest, I mean, 35% was the high here. So it wasn't like it was, you know, something huge. So that's pretty much it right there. So I'm going to keep an eye on these. I'm going to keep an eye on these particular stocks. So overall, you know, for the week, I did a total of $38.10. Nothing great to write home about, but we are going the right direction. We're making great trades. I haven't had one losing trade. Now that will change. You know, I expect at least one losing trade per week as I trade here. I took 4 trades. This one I guess you could count that one as my loser for the week, was this one here on October 4th. So overall, not bad. Seeing a profitable trade. Average green trade is running about $12.70. I'm hoping to boost that up this week, really focus on my metrics, my risk analysis, and focus on getting that up. So overall, 100% for the week. Can't complain. But we just need to drive those numbers up and work more on that risk reward ratio, getting a higher earnings per share, and getting that to something more of in line with a 2-to-1 risk reward ratio. So if you want to follow along, my name's Chris. I've been learning the day trade since March of 2024 this year. And if you'd like to follow on, definitely subscribe to the channel. I'd love to have you. I create new videos every week for this channel, just sharing the trades, what I'm learning, what I'm doing. And if you'd like to follow along, you can definitely do that. Now, I want to check into that real quick. If you do want to download the stock, particular stock here, let me do that real quick. It's called, oh shoot, I just go out of it. It's called Real-Time Stock Screener. So if you look in the App Store, we'll just go to the app. We'll just go to Real-Time Stock Screener. This right here. I think it's this right here. Let's bring it up real quick here. Yep, this app. This is what it looks like. It's by Maxim Glova. I don't know who that is, but it's got a great rating. It's a great free stock app. It gives you all the information you need. So if you want to know all that stuff, you can definitely do that. You can definitely check it out, and you don't have to like program a stock screener or nothing like that. This thing will tell you all that. You can look at pre-market, you can look at the top gainers, and you can look at post-market and things like that, and all the different things going on, and it can get all the filings and all that right there on that particular app. I love it for that because it just does all these things. You don't pay for it. Because I'm on a cheap budget, to be honest. I'm not trying to spend a ton of money. So if you'd like to follow along again, check out my videos. I got new videos coming out every week here, just sharing all the different things that I'm doing, what I have going on. So definitely check out those, and I will see you in the next video. Thanks for watching.